Hi, welcome to WealthMills Securities Weekly Market Wrap. This week, if we analyze the data, markets have been very much volatile. They have been kept on coming down and going up. But if we analyze the data, what prompted the markets to be very volatile last week was there was a report released by global rating agency Moody's about the banking system in Asia Pacific region. According to this report, they rated Indian banking system as one of the most vulnerable banking system in Asia Pacific region. But the first place goes to Malaysia, and post Malaysia, Indian banking system in Asia Pacific region was most vulnerable banking system as per this report. So this prompted the banking sector to be in volatile mode during last week. You have observed, okay, there were a series of bad news that have been kept on coming into the banking sector, especially in NBFC sector. There were news of credit crunch and the news of debt crisis in financial sector. We witnessed in terms of Island FS debt crisis. Later on, there are a series of defaults by different NBFCs. Like there is a company we discussed a couple of weeks back. There is a NBFC by name Altico. They defaulted the payments of repayment to different banks and NBFCs in India. Last week the news triggered in India was there is a bank by name PMC Bank, Punjab and Maharashtra Cooperative Bank. It's a cooperative bank in Mumbai, but they lent money to different prominent groups in India, like HDIL, RBI, the Reserve Bank of India regulator, come up with strict regulations and kept a lot of restrictions on this bank. So there was a series of negative news that has been kept on coming into the financial services stock. That's why last whole week markets were in a volatile mode, especially in banking and financial services. But in the midst of these bad news, there are certain quality NBFCs and banks. They corrected to nearly a 15 to 20% loss in last 10 days. That gives a good opportunity to enter into these quality NBFC as well as banking stocks. So use this volatility to accumulate these kind of quality NBFCs. Call up our research team. They will help you to identify these quality NBFCs as well as banking stocks. I just wanted to mention you their valuations are very attractive to enter at this point of time. I want to mention to you, I have been kept on getting many calls from all our investors about what's happening in S-Bank. Please keep in mind this is not a stock recommendation. I just want to tell inform to all our esteemed investors the whole saga of events that have been happening in S-Bank. To give a brief snapshot and picture about S-Bank. S-Bank, the first leg of the crisis started in S-Bank in the first attempt when RBI not given any extension of the tenure to the erstwhile promoter of S-Bank, Mr. Rana Kapoor. So that was the first leg of crisis that happened in S-Bank. Later on, during last quarterly results, S-Bank was the only bank who declared losses in the entire banking sector. So this led the stock to come down and get the stock got corrected nearly 70% from its peak. And every week the new CEO, he was kept on coming onto the media, and he's giving the outlook about the company, but the market is not impressed, and we have seen a significant correction in terms of the value of S Bank is concerned. Currently, if I have to tell, the market cap of S Bank is 8,000 crores. Nearly it lost 70 to 80% of its market cap from the peak. So what is there in S Bank in the days to come? The first thing is we need to analyze, okay, as the entire banking system is, the sentiment is at an all-time low. If you are a person want to get into S Bank, one thing we need to keep in mind is first, what led the stock to come down. There is a series of negative news in the stock, and last 15 days the fall was accentuated by the promoter led group companies which have been selling their stakes into the open market. So that caused the stock to came down to nearly to 35 rupees level. And as per the current reports in the public domain, it says the erstwhile promoter, Mr. Rana Kapoor, have almost all completely exited from the bank. His stake is, by and large, it is at a not even a single digit level at present. So that prompted the stock price to come down when he pledged his stakeholding to a different group. Since the stock price has keep on coming down, to meet their obligations, they sold the stock in the public market. So this prompted the stock to correct significantly. And also, among all these financial issues that has been happening in the market, S Bank have exposure to every group which are facing crisis in the market. They have exposure to most of the groups. Their book have the exposure to most of the groups which are going through crisis in the market. The most immediate step for S Bank currently is to raise the capital, because to expand their growth, they need the immediate capital. Recently, couple of months back, they raised a QIP, qualified institutional placement, at 84 rupees to some investors in India as well as abroad. But from 84, the stock came down to around, currently it is hovering around 40 rupees. So rising capital at this price is extremely difficult to S Bank management, but there was a con call yesterday with the management. The management sounded very optimistic, and they given a commentary. They will raise capital in the days to come. If the S Bank management could able to achieve in terms of rising capital immediately, that will be a big positive for S Bank. And also their loan book, which has been categorized, the NPA level is pretty much high, but the book has been exposed to different groups in India which are going through crisis. So these are the two factors we need to look into S Bank. One is in terms of rising capital, and in terms of the next quarterly provisioning, how they are going to do, and how the recovery of these bad loans in the days to come. These are the major triggers that will influence the stock price. But one thing we need to keep in mind is Warren Buffett always says, okay, don't do with the derivatives, because derivatives are the weapons of financial destructions. And one more thing, what the famous investors like Warren Buffett, they tell is, be careful about the leverage. In S-Bank case, if you just observe what prompted the stocks to come down is, it's not the investors, it is the promoter. For example, if you have a 100 rupees share, you bought this share and kept it in your demat account, there's no problem. But if you go for a leverage with this 100 rupees share, the share value is 100 rupees and you bought, and you just leveraged this 100 rupees and bought, leveraged this 100 rupees and went and raised money with this 100 rupees, and again you invested. If the underlying asset, your original 100 rupees value comes down, then there will be a ripple effect on the original share price. So this is the leverage that caused the problem with respect to S-Bank price and prompted the lenders to sell at a throwaway prices. So just keep in mind, okay, it's not advisable for everyone to go for leverage. If you don't have any leverage, you need not have to worry about anything. This is all from me. Signing off. Thank you.